Oh, it's my turn. All right. Hello, everybody. Good evening. Good evening. All right, let's get started here. We'll be starting shortly. Starting shortly. Okay, let me see if I can just move this up here. There we go. I feel like I'm in the background here. Let me just move the blinds up a little. Maybe I should move it up or down. I'm not really sure. If we move it up, what happens? What happens here? Nothing happens. Number three. Number three. That's it. I think I'm in the Yeah, I'm in the shade. I have to move them down. That's it. I gotta move them down. Get the sun away from the back there. I thought I'd show you the sunset. Yeah, how's that? A little bit better? Maybe not. You gotta see me now. All right, there you go. A little more, a little more. Okay, we're all good. We're all good. All right. Hello, everybody, and welcome to another edition here of DayTradeSPY.com's Week in Review. Let me just find the record button and hit the button because the time is now 8:04. Oh my goodness. All right, we're running a little late here. There's the button right there. Okay, good evening, everybody, and welcome to another edition of DayTradeSPY.com's Week in Review. And it is Sunday, May the 17th, 2026. And my name is Hugh. And I got to tell you, Um, we are this is I think the first session we're doing in our 17th year. So just roughly give or take a couple sessions. I might be a little bit off here, but we've done this is our 833rd session, Sunday night session. Continuous session, 833 of these things we've done. That's a long time. That's a very long time. 16 years. I know people who have been married less time than that. You know what I'm saying? They got married and divorced. I know, I know, no kids younger than 16 years. Anyway, grandkids are younger than 16 years. We've been doing this a long, long time, and we're still plugging away. And a lot of people are still enjoying it. So that's good. You know, we have a lot of people online. That's even better. All right. Well, a lot of people are still coming online, and that's good. And I just want to say that if you find that I speak too fast because I get very excited about this, just let me know in the questions box to slow down. And if I say something you don't really understand, say that and tell me in the questions box too, and I'll go back and and tell you in a different way so that you do understand. Also, want to tell you that anybody who is new on, if I do talk about anything technical that we might not understand, don't worry so much about it. This session isn't really technically inclined, so you're not going to really miss anything. So anyway, this is our week in review, intro to trading. Folks, let us know in the questions box if you are new to options or new to SPY option. That's what we do. We trade the S&P 500 SPY. That is the stock that follows the top 500 stocks. All right. So wherever the economy goes, that's kind of where SPY goes, and that's what we do. We try to trade with the market, make a few bucks, and go with that. So. All right, tell us where you're from too. James K from St. Louis. Yes, good to have you here. James, anybody else? Let us know where you're from, just out of curiosity. All right, and the questions box. Thank you for that, Phil. Phil, Al, he, I believe he's in Las Vegas, if I remember correctly. And all right, let's go. Let's move along here, folks. All right, to be discussed tonight, we're going to take a look at last week, the upcoming week, and we're going to look at, where do we go? Where do we go? Oh my gosh. Last week, upcoming week, got a 2-minute tutorial, answer your questions, got a little contest. The winner gets, I believe, Triumphs and Tragedies, the ebook. It's a simple contest. You don't have to have the skill. You're going to be taking a number from 1 to 100. Whoever gets closest to it, as we spin the wheel, actually, it's our random number generator. Person closest to it is going to get the prize, which is an ebook, free ebook, Triumphs and Tragedies. All right. Okay. DeBarry, Florida. All right. Monteverde Beach, Florida. Excuse me. Okay. Okay. Yeah. So put your questions in the questions box. We'll try and get those a little bit later here. So here's the standard disclaimer, folks. I gotta give you this here for a few seconds so you have a chance to read it and you understand that there are risks involved in trading securities, and they can be substantial. You can lose it all and even more. The other thing you don't want to do is get too crazy into your trading so that you've got everything on the line and you blow up your account and then you're toast, right? Yeah, I've heard some horror stories over the years. One gentleman told me how he's very well off, got into trading, not our program. He joined our program after he blew up his account. But he's telling me how he ended up pouring coffee at Dunkin' Donuts. It is, I think it was late 70s or something. But anyway, folks, you alone are responsible for all your own trading, and past performance does not guarantee future results. I think you know that. Very important. Money management is extremely important. So, why listen to me, folks? Okay. No, no, no. William, no, 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 we don't. Okay. Okay. You already put the number in. All right. Why listen to me? Well, my name is Shio, right? I learned trading from the trenches, deep in the trenches. Been teaching people again since 2010 publicly. All right. I mastered some cool strategies, like you say, from the trenches. That's where I think you learn the most. You know, School of Hard Knocks. You ever hear that term, School of Hard Knocks? I always wondered what that was. I thought maybe on my resume I should say that I graduated with honors from the School of Hard Knocks. That's right up there with elbow grease. I remember I was cleaning my car. I was waxing my car once. It was back in 1976, I believe. I had a really nice little sports car, and I was in the waxing, and these girls came up to me and said, "Oh, you need some elbow grease with that." I said, "Oh, elbow grease. I think I'll go to Auto Pro and get some elbow grease." You know how embarrassing that is? Can I looking for elbow grease? That's just a little joke. I never did that. I was wise to that, but these things. Anyway, folks, I took a lot of courses. I'm not going to kid you. I took a lot of courses, and I spent a lot of money. Oh, it was actually pretty funny because I would take all these courses, and yeah, I don't know if you ever taken any of these courses. Let me know in the questions box if you ever did this. So you take the courses, you know, you go to the webinars, the seminars, and they sell you something. And back then, by the way, it's for thousands of dollars. I mean, a lot of money, a lot of money. And you take it home and you open the box, you put the DVD or CD in or whatever. Not quite the same as what they showed you in the seminar, is it? In the webinar. No, it wasn't a webinar, it was a seminar. We used to do live seminars. And you call tech support and guy doesn't speak English. You can't seem to get from step one to step two, and you're very frustrated. I remember I had this one program, I forgot which one it was, but there was all bells and whistles going off all the time, every 2 seconds. Ding, 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 bang, bang, ding. So, holy, you're supposed to buy when you hear this, and the three dots light up, and then you had to buy, and when you lined up again, you sell, and it was insane, and it never really worked well. But it just drove me crazy. Anyway, I had a lot of these programs, and some of them I didn't even open up, and it's so funny. I guess it was probably about, oh my gosh, I want to say 10 years ago, maybe nine, maybe even 8 or 9 years ago. We're cleaning out a closet, and I throw and grabbing all these programs I bought, right? I'm ready to throw them in the garbage. My wife says, "Well, what are you getting rid of that for?" You spent, and my wife has an incredible memory, random access memory for stuff like that. She knows exactly to the penny how much I paid for each course. Well, why are you getting rid of that? You spent $4,995.68 for that one. Oh, I'm so glad you remind me. Thank you very much for that, Dale. You know, you reminded me of that. And the next one, and so what do I say to her? Well, she said, you didn't even open that one up. You know, I know, I get it. I said, but why would I go with these other programs when I found something really pretty good? Why would I, she says, well, you spent all that money. So yeah, but that's the cost of getting to the point where I am now. As it turned out, a lot of these things didn't work for me, and I checked them. And she said, "Well, why don't you just sell them on eBay?" I said, "No, I don't want to put anybody else through that. What I'm going to do is I'm going to teach people what I do because I know that what I do works. And if they follow what I do, which I learned the hard way, then they hopefully have a good shot at being successful. Whereas I'm pretty sure that if they follow these other crazy things out there, probably not going to work. I don't think I'm stupid or anything, but they didn't really work very well for me, and I don't know if they worked well for you or not. And obviously, I'm thinking here they didn't, because if they did, you wouldn't be here, right? Anyway, I threw them all in the garbage, and that was the cost of the membership, right? Of learning what to do. But I learned some pretty cool tricks, and I started bringing home some pretty good money and toys and different things, and then what happened was people coerced me into showing them what to do. And that's what started this whole thing, teaching people 16 years ago, not, 2010. I believe it was May the 11th, 2010. So that was our first client. And it's funny because, and I'm telling you these stories because it's just anecdotal. But what was funny was um, this was never supposed to last. I mean, it almost started out as a lark. It's almost I don't even, I think it was like a I don't know if it was a dare or something. Somebody said, "Oh, why don't you just put up a website or something?" And I did, but I thought, oh, I'll get a couple weeks out of it. Maybe, excuse me, maybe it'll go a month and it'll fizzle out. It didn't fizzle out, folks. In fact, it ballooned, it mushroomed. People started telling their friends and friends and friends, and before I knew it, I had a lot of people. Oh my gosh, they're all throwing money at me to teach them how to trade options. I thought, wow, there's a real thirst for this kind of thing. So then we got a little more serious, and we had training programs, the inner circle, we had trading room, all these wonderful things, and we used to do every Sunday night we had these free sessions. That's where it started. And Inner Circle, we had another weekly session. I think it was Thursday nights we started those, and then moved into Wednesday and Tuesday and whatever. It's back to Wednesday now. Anyway, that's my story. I'm going to stick with it, folks. We so people ask oftentimes. I get this question a lot. Well, if you're really making money on the market, why are you bothering training people? And are you making money training or are you making money trading? And I say, well, it's actually both now. It's both. I'm not going to kid you, it's both. And but frankly, it's because I enjoy it. It keeps me sharp, right? If I have to stay sharp for myself, or if I because I'm teaching other people, then I stay for sharp for myself, right? And I just love the thrill of hearing the success stories. And my motto here, if you want what I have, you got to do what I do. So we got bought out by Eagle Financial Products, all right, a subsidiary of Salem Media Group. And what happened was they brought on John Johnson, all right? And his parents were very creative when he was born. Oh, what are we going to name this Johnson kid? Oh, we'll call him John. Very creative, John Johnson, very easy. And maybe you have to go to the John a lot. I don't know. But anyway, he's a litigation lawyer. And he pretty much gave up practicing law. He's still a lawyer, but he gave up practicing law and turned into an options trader. That's how committed this guy is, and that's how good he is. He's very, very good. Highly acclaimed in industry publications. He's been quoted a lot. He uses highly effective tools to determine his trades. He has a very simple philosophy: take what the market gives you. His success, his definition of success is doing what you want when you want. Okay. Now so John comes with his set of indicators, and I have my set of indicators, and we each look at our own set of indicators to determine the trades in the trading room because we do the trading room together. And it's really interesting because when he might say, "Well, I think the market's going to drop. I think it's going to go down." I say, "John, I got to agree with you. I see the same thing using my indicators." So when our indicators unite, ladies and gentlemen, I got to tell you that's our motto. When our indicators unite, our trades ignite. So if he says the market's going to go down, I say the market's going to go down, you might want to buy put options. All right, put options. Because the market's probably going to go down. And for that reason, we have this dynamic synergy between us. And this is actually very good for you because when you're following us along in the trading room, this is how you actually make some very serious money in the market. Okay. All right. Now, for those who may not know, anybody who might be new to options, I mentioned calls, puts, these sorts of things. These are options. These are options, and options are derivatives of the underlying stock. So we're always talking about the underlying stock, but we're talking about the derivative, which is an option. So we don't care about the stock. Frankly, buying I don't know, $600 stock, if you want to control 100 shares, you're putting $60,000 into that trade. That's a lot of money. And let's say the market goes up $1 on a $600 stock. Well, you just made yourself 0.1667%. Wow. Hardly anything to write home about, especially when you take off commission. But the option gives you huge leverage. So we want to control the stock, but we don't want to buy the stock. I don't want to buy the stock. In my younger years, I used to buy stock. And I'm sure many of us started out that way. Oh, I'm a stock trader. I own all these shares. And you get a little certificate in the mail back in those days. Wow. I can plaster my wall here with useless certificates that I had over the years. I mean, I could probably go to Staples and buy blank certificates if I wanted to award myself a stock certificate. Come on. Oh my gosh. I can't begin to tell you how much money I wasted buying stocks that never went anywhere. Stocks I couldn't cash, stocks that became worthless, stocks that makes me wonder why am I still doing this? But when I discovered options where I can actually control 100 underlying shares of the stock that moves based on the top 500 stocks out there, that actually got my interest. Because for SPY to ever go down, if SPY ever went to zero, oh, we got big problems. I mean, huge problems. All right. But it's kind of nice knowing that the top 500 stocks, we can actually control those shares and make money on whichever way they go. So you got, NVIDIA, the chip maker, you've got Microsoft, you've got Apple, Amazon, Google, you've got Tesla, you've got, you know, going down the list, you've got all the banks, you got Citigroup, you've got JP Morgan, you've got Goldman Sachs, you got McDonald's, you got Coach. You got all of the top 500 stocks. Most of those stocks never even heard of. Stocks that are bubbling under things like Procter and Gamble and just about everything out there is on the S&P 500. Brush your teeth in the morning with the toothpaste. You use Colgate. Yeah, that's in there. Use deodorant. That's in there. You know what? Everything is in this. It's actually pretty cool. So I don't have to concern myself with individual stocks, and that's really pretty cool. Anyway, without further ado, it's actually a pretty cool way of making money by just determining where the economy goes, and that's where we go. And John has his way. So this is how we make our money, and this is how a lot of people make their money. I'm just looking here at one of the comments here from my buddy Ralph. Ralph has been with us a while. Ralph W. says, um, "Wow, thank you so much for that, Ralph. I really appreciate that." I want to tell you, and I'm going to get to this in a second here. Spy in the Market. This is our newsletter that goes out every Thursday. All right. All I have to do to get onto this thing is just go to our website, DayTradeSPY.com, and leave us your email address on the pop-up that comes up, and then you'll be sent the email every Thursday. And it's actually a very light read. It's not a deep involved, thing's going to take you a half an hour to read, nothing like that at all. It should take you about 2, 3 minutes to read, but it's actually pretty good, very entertaining, light, relevant. This week's topic is an in-depth look, an in-depth peek in the Day Trade Spy trading room. Trading room. A lot of people wonder, oh, what is this deep, dark trading room? What is this? You go behind a curtain and you got to go down this dungeon or something? Is this some, deep, dark secret or something? No, not at all. Anyway, talk about the trading room. So rather than tell people individually what it's all about, I get really into it and get right into the trading room. So I think you'll really enjoy this one. Anyway, Ralph's comment says here, I've taken various courses through the years, Hugh. By far, hands down, Day Trade Spy with you and John is the best mentorship I've ever been involved in. I'm making serious money, and that's what it's all about, and fun. Ralph, I am going to ask that you, if you do not mind, um, I'm going to send this back to you, and I am going to ask if you could kindly, and I'm going to do that after the session. You can kindly let us use that as a testimonial, because I'm sure my bosses would love to see that. But the thing is, they always say, "Well, we need approval. We need approval to use that as a testimonial." So, and I think they would actually really like to hear that. So, yeah. No, so here's the funny thing, and it's actually really, really funny. So I left. I used to be in corporate America, major insurance firm. I used to be an internal auditor for a major insurance firm, and the company we had offices all over the place. Anyway, including Canada. All right, so we'd be all over North America with our internal audit function. But anyway, when I left the corporate world and just got into trading, I thought, oh, good, I'm hanging up the corporate world. I don't have to do the corporate thing anymore, which is really kind of nice. And so did John Johnson. Right? He left law and a major law firm and all that stuff. And we thought we were going to be, right, we're going to be on our own now. We're going to be doing pretty cool and doing our own thing and whatever. And then, of course, Eagle Financial Products, which is owned by Salem Media. They bought us out. We're back in the corporate world. We're back. So we have bosses. We believe it or not, we have bosses, And all of our bosses are younger than John and myself. We're the old guys, but it's kind of nice. They sort of leave us alone. And our immediate marketing guys probably, well, let's say I would say he's probably half my age or longer or younger. That's a little tough. I'm going to be honest with you. That's a little bit tough to take. But nice guy, nice guy. But we come with experience. They come with education. We come with experience. Hmm. Anyway, it doesn't matter. Um, so we're back in the corporate world, and that's the irony of this. Yeah, back in the corporate world. But anyway, Ralph, I really appreciate that comment of yours. Folks, this week's topic, an in-depth peek at the DayTradeSPY.com's trading room. Trading room. You got to really know that. All right, let's get on to what's going on here. What happened this last week? Well, this is what happened, I'll tell you. Um, on Monday, last Monday, we had a fresh record high. Strength in the AI and chip stocks offset growing geopolitical concerns. So I'm going to be frank with you. The last few weeks, I believe we are in our 11th or 12th week war with Iran, but it's been all about geopolitical tensions, geopolitical situation in Iran, and a balance between that and artificial intelligence and chip makers. So whenever the geopolitical concerns seem to take a back seat, or AI and chip stocks kind of come to the forefront, we end up, getting new highs. Tuesday, inflationary hot CPI numbers, consumer price index numbers came out, and rising oil prices knocked SPY down 0.16%. Didn't last long. We did end up closing higher than what we opened, which is interesting. But actually, what happened Tuesday is a little bit different. And in fact, I should probably make note as to why this happened the way it did. We did close a little lower, obviously 0.16% from the day before. But what knocked the market down here was Jamie Dimon. Jamie Dimon and Jamie Dimon. Is he Goldman Sachs or JP Morgan? I'm trying to see. Where is Jamie Dimon? I got to find out. He's the head guy of, I want to say JP Morgan. Jamie Dimon. No, JP Morgan Chase. Not Diamond, just Diamond. Dimon. So he came on and he's talking about the doom and gloom and how we're going to have a massive, I don't know, sell off and this and inflation and overextended. So he kind of pushed the market down. He pushed the market down several points. We were down here from about 737-ish all the way down to about 732. He knocked it down about 5, 6 points. And after he stopped talking, I guess the market recognized a good buying opportunity, and the bulls came back and pushed it up higher. And that was Tuesday. On Wednesday, despite higher than expected producer price index, PPI numbers, not reports. I should probably do this. Oh my gosh, who did the posting here? Okay, let's go there. I don't like typos. Despite the higher than expected PPI reports, a massive tech-led rally and optimism around AI overshadowed alarming inflation reports to push SPY up to close at yet another record high on Wednesday. Thursday, we saw another record high at 749.53, folks. SPY has never been higher, right? Retail sales came in as expected, and a massive rally in artificial intelligence and tech shares pushed SPY to yet another record high. A little bit of a sell-off on Friday and surging oil prices. Oil went up, inflationary, right? A lot of inflation fears dampened investor enthusiasm to drop to test 738 in post-closing trading. But we also had another situation come up here on Friday, and that was the fact that President Trump and the Chinese President Jinping, whatever his name is, Xi Jinping. Hope I pronounced that right. I apologize if I messed it up. But they didn't come away with any major resolution to anything. I think the Chinese guy wanted to talk about Taiwan, and Trump wanted to talk about Iran, and Chinese wanted to talk about Taiwan, and then Trump wanted to talk about oil, and then the Chinese guy wanted to talk about Taiwan, and then Trump wanted to talk about the Strait of Hormuz, and the Chinese guy wanted to talk about Jeffrey Epstein, and then Trump wanted to talk about Taiwan. Anyway, a little disappointing, and investors were a little disappointed they came back. But I think the objective of that exercise was to just to kind of open up the dialogue and start talking. And the Chinese guy says, it's better to cooperate. And if we have some, essentially, I'm obviously paraphrasing, but he was looking more for cooperation between the world's superpowers rather than some sort of a rivalry, right? Anyway, markets did come down on Friday. I don't know where the last I saw the futures were actually down for now, but it doesn't matter anyway because that changes real fast, right? So anyway, that's kind of what happened last week. Seasonal charts. This is a seasonal chart. The way this works is that blue line is current SPY price, all right? And the red line is an average of the last 5 years daily close. You can see we're kind of pushing back to the upside here with a lot of bouncing going on. But when you drill down into it, you can see that historically SPY rose about 3 points last week, and historically SPY rose about 1 point the following week as we come up. And we're still pushing up. Oh my goodness, we're in the 739. I mentioned earlier about stocks, SPY stocks being $600. Obviously, I'm going back a long way. We're talking about $739 for a single share of options, SPY stock. That's a lot of money. Folks, last week had robust markets continue at their near record highs. All right. Despite a near 10% correction and ongoing uncertainty with Iran. The sell in May and go away. This is a saying that you hear a lot. Well, that does not apply this year, and actually never applies to us the way we trade, because there's plenty of good news. There's no reason at all to sell in May. Where this came from, and I'll talk about this a little bit later on, but this doesn't apply to us. So just ignore this comment. Okay, what happened was many years ago, a lot of traders would start selling off their holdings, put it in cash or whatever, and then they would take their vacations. They worked hard all winter, and this massive sell-off would bring the valuations down. But this doesn't apply to us this year. We're still seeing continued record highs. And here's the irony of this: a lot of investors are sitting on the sideline these days. They don't want to trade. They don't want to invest. They're afraid. They're afraid of the uncertainty. Yet the S&P 500 has never been higher. The Nasdaq continues to go up. The Dow continues to go up. It's no joke. Check your 401ks. You're probably at record highs. Analysts do not see any conditions of a deep or prolonged downturn in markets. And these analysts are very pessimistic, and they'll be the first to tell you, "Oh, there's a major recession on the horizon. Sell, 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 sell." I'm sure they understand, but when they start saying sell, 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 people sell. Well, the selling is what causes the major recessions. I don't see that happening either. There's going to be some corrections and pullbacks and different things, but we're not going to have this massive sell-off now. There's a lot of talk about the artificial intelligence being a bubble, and I'm not so sure about that. I'm not so sure. We had this discussion a couple of weeks ago. This is a major, major upheaval in the way we do things, right? Just like the internet was a major upheaval, the industrial revolution was a major, major thing. Those were not bubbles. The bubble was the dot-com era. The bubble was the mortgage situation years ago with the banks and stuff. Those were crazy times, but I think artificial intelligence is, first of all, it's here to stay. It's massive. It's only going to get, more and more. And every time I turn around, I'm hearing more and more. A friend of mine wants to start a website where he's going to make songs for people. Well, I said to him, good luck with that. What do you mean? Well, what are you going to do? So people are going to pay you a few bucks and you're going to create a song. Oh, yeah, yeah. Yeah, well, people can do that without paying you. I can go to ChatGPT or any of these artificial intelligence services and create whatever song I want, however I want it. Do I want a folk song? Do I want a country song? Do I want a rock song? I can tell it in the tone of, whatever, in the words, how many verses, lyrics. I can tell you everything. I could come on here within 1 minute if you want to stay with me. In 1 minute, I'll have a song about trading options. I'm not going to bore you with that. But anyway, And again, here last week, Trump's meeting with Chinese Xi Jinping disappointed investors. I just talked about that. So anyway, I don't see major downturn. There are going to be some profit taking situations. There's going to be some pullbacks, but I think this upward trend could continue for a very long time. I have no idea where it's going to go, but I'm not certainly not going to pull out of the market here in the long term investments because of a simple market. I mean, even the S&P 500 only went up 0.2% year to date, 8.7%. Look at this. Dow Jones and the Nasdaq each dropped 0.1%, but we're still year to date. The Dow is up 3.6%. The Nasdaq up 13.1%. Well, if we keep going like that, what's today? This is May the 17th, say half the month of May. So let's see, 13.1 divided by what, 5.5 times 12. If we keep going like this, the Nasdaq is going to be up 28.5% by the end of the year. We keep going like this, 8.7 divided by 5.5 times 12 roughly. Keep going like this, the S&P is going to be up about 19% this year. Right now, the Dow, if you're following the Dow, well, it's going to be a little bit less, but that's going to be up still pretty respectable, about 7.8, 7.9%. So I don't know. I don't see this as a bubble. But anyway, what do I know, right? Okay, let's move along here. Week ahead. Monday, it's a low no news day. Tuesday, we've got pending home sales. FOMC meeting minutes on Wednesday. That's where they dissect what the decision was the last time. All right, and there's no real news there, but they actually get into the nitty gritty why they voted the way they did. Thursday, we got unemployment claims, Philly Fed Manufacturing Index, S&P Global Flash Manufacturing, and S&P Global Flash Services PMI report, and on Friday, University of Michigan Consumer Sentiment Report. So what does this mean to volatility? Well, I can expect low volatility on Monday, medium Tuesday, Wednesday, and high Thursday, back to medium on Friday, and expect high volatility whenever President Trump speaks. And we never really know when that's going to happen. Usually the same day he's on the schedule, and and then all of a sudden, I don't know what happens, but markets start going a little funny. Depends on what he talks about, right? Depends what he talks about. Anyway, that's kind of where the week is coming up here, and some traders are going to be probably leaving for vacation at some point, but the way we trade, the sell in May and go away, does not apply, folks. Does not apply. Why? Because we day trade. We take advantage of both the ups and the downs as they happen. So I want to dispel that fear that people are concerned about. Well, we're not supposed to trade now because sell in May go away. Well, I'm sorry, but the markets, there's still a market, and it still goes up, it still goes down. What John and I do in the trading room and with all of our services, we determine the propensity, is it going to go up or is the propensity to the downside? And that's the direction we're going to go. We're looking for a few points. That does not apply to day trade spyers. This origin, this is based on the theory that markets underperform between May and October. And in contrast, markets see stronger growth between November and April. Now, since 1945, the S&P 500 gained a cumulative 6-month average of 6.7% between November and April, and only 2% between May and October. So you can see where this came from because they sell off. Well, that's if you are an investor and you put your money into the market and you just leave it there. But what we do, we just take advantage of every day, pick up a few points every day. Buy it, sell it a few minutes later, buy it again, sell it a few minutes later. When I go back into my historical records, my spreadsheets, I don't see any change, material change in what happens in May through October as I do from November to April. Okay, I can still make money, and I still do make money both going up and down. So that's the nice thing about what we do. All right, you don't have to worry about that. And there it is. Yes, we make money regardless of which way the market is going. And that's the nice thing. That's what I really like about this. It actually satisfies not just the need to make money. I think making money, for me anyway, is just a way of keeping score. But I'm going to be a self-declared addict. I'm going to tell you, I am addicted to this. So it's kind of like a rush that you need, or at least I need every morning. I look forward to getting up in the morning. I have a reason to get up in the morning. I get the coffee together, and all right, let's take a look and see what's going on. And it's a personal challenge to meet, to beat the market in its own game. And I can't think of anything better to do. It's really kind of a cool way. Make a few bucks in the morning and go enjoy the rest of the day, right? And that's exactly what we do. We teach people how to do this, and this is actually so cool, so cool. I guess I have the perfect job with this, but I think if I didn't do this, I would be in the trading room trading along with those guys that are doing it, because this is the cool thing about it. And I hope you all join us in this thing. Anyway, we have this program called the 2026 Goal, where we track all the trades in the trading room that we narrate, and we are recording these as if we are only buying 5 contracts per trade. All trading room trades are included. All right, all the winners and the losers. This is what we did here this last week. We had one loser here. That was my loser. Oh, that was my loser, huh? I guess it was. I lost $220. I thought John had a loser in there, but he didn't. That doesn't matter. Anyway, yeah. So I mean, this is kind of the way it is here. I think a little bit of a typo here. The price I got here for John, so I think he sold at 715. I have to take that off, but just under $17,000, you would be up on year to date if you only traded 5 contracts on this program. All right, now what I'm going to do is just talk about the trading room a little bit, because I know I'm bringing this up to you, and I mean, we keep talking about this, but this is where it happens, folks. Pro traders, John and myself, we host this. This is not something we do on the side for kicks and giggles. This is our passion. It's our vocation. This is what we do, and it's an interactive session. You learn and earn, fully narrated. This is where strategies come alive. Now we have different strategies that we use. I call my bread and butter strategy. This is a strategy that's very, um, it's kind of like a commonplace strategy. When a certain setup happens, I just jump in. Okay, I'm going to go in. I think it's going to go up. I think it's going to go down. We also have another one called the OMG, short for out of the morning gate. Sort of a simple strategy. It says basically that, well, we're going to set up the support and resistance lines on the 5-minute chart right at the market open. But we're only going to go back, just a very sort of short time period of time, maybe an hour, maybe a little more, depends on where the support and resistance lines come in. We determine these levels, and then the first 5-minute candle to close outside of either support or resistance, that is the direction we are looking to go to make a 5% or so, a 6% gain. But we only get into it when the market direction is set up in our direction. In other words, if we close, say, to the upside, but we're seeing a lot of red candles, pull back, we're not going to get into the pullback. We're going to wait until it turns back into the green and heads back up, right? That's when we're going to get into it. It's been working very well. Statistically, it works extremely well. There are times even when we think, totally going against us, we say, well, okay, well, we'll just wait and see, and then we'll close it out by the end of the day. And we had a situation once last week where that very thing happened, and yet it came back around, and the market went down and took us out on the puts. I think it was around 3 something. I'm just going to go back and see what day that was. Let me just go back here. What time was it? 3:33. No, was it that? That one, I'm not sure which one it would have been. Maybe it was that. Maybe that was the calls or something. But there was could have been. Yeah, we do both calls and puts. I can't remember. After a while, the days just kind of come into each other. But there's a time there, right? 3:33. That would have been the calls. Market went against us, but we waited long enough, and it gave us not much. It still gave us $55. I don't even know if that was the ONG trade or not, but regardless, just wait long enough, it'll come back in your direction. Anyway, these sessions are interactive, right? So you can pull up your questions in our questions box. We answer them. Learn and earn. Now, if you know what calls and puts are, that is where you need to be, all right? People sometimes say to me, well, Hugh, I don't know how to trade. So I'm kind of wasting my time in the trading room. So I always ask them, well, do you know what calls and puts are? Oh, yeah, yeah. Okay. Well, then that's where you need to be. Don't worry about not knowing the strategy, because that's where we teach it. So there's no reason for somebody not to be in the trading room, unless, of course, maybe you're working and you're just not available at that 1 hour and 20 minutes every day or whatever we're on, you know. Folks, these sessions are also recorded for later review. Now, I do have some people, they live sort of away from the Eastern time zone. It's a little bit tough for them to get in and follow along during the live sessions, but they learn a lot. So they always watch the recording. So these are recorded and they watch the recordings and away they go. Folks, the cost for this incredible mentorship, 2 pro traders in your back pocket, $24.95 for the year. $24.95. I'm going to tell you something. When you started this thing 16 years ago, we were charging and we were getting $150 a week, and we're only doing it twice a week. I mean, that was $7,800 a week for twice a week. Now it's costing you $2,495 for 5 days a week with 2 pro traders. Or if you don't want to do that, all you have to do is just get it for the quarter, $699 for a quarter. So what is that? $699 divided by, what is that? Quarter divided by monthly is $233 divided by 4.33. You're talking about $54 a week, or roughly $10, $11 a day. I'm not even sure you can buy half a Subway sandwich for that price. Can you? Maybe you can. I don't know. And a drink. I don't think you can buy the half Subway sandwich, a drink, and a bag of chips. I don't think you get that. Not for $10, folks. And that's not even for both John and myself. That's for one of us. So basically, what we're doing is we're giving, telling you that basically for a snack or a lunch, a light lunch for one of us, John and myself, you are getting a phenomenal education, phenomenal mentorship, and coaching. You see, it's very important, just like anything else. Let's say you're in a sport, right? Let's say you're a football player, right? Or a hockey player. Like, for example, let's say you're the Buffalo Sabres and you're going up against Montreal tomorrow night, and you have to win, right? Because you want to get that Stanley Cup real bad. And I'm a Sabres fan. Uh, so you need coaching, right? You need to have a good coach. That's what happened with the Buffalo Bills. They kept getting up there, but never got to the Super Bowl. Never got to the Super Bowl. So what happened? They fired the coach. You need a good coach. Not to say the coach wasn't any good, and maybe this time would have been it, but never know. But anyway, replacing the coach was a good thing, perhaps. So just like that with trading, you need a good coach. You could try this on your own, and we have a lot of people that do. A lot of people say, "Oh, I know how to trade." I don't. Okay, well, good luck, and I really sincerely hope you have a good fortune with it. But they tend to come back to us and say, I don't know, I'm just having trouble with this, trouble with that. Can you help me? He said, yeah, sure, and then here, sign up for this, sign up for that. And over time they become very good at it, right? So I suggest that this is a good deal. And this is the best value. And if you know what calls and puts are, this is where you need to be. Folks, here's the nice thing about this. Our programs have a 30-day money-back guarantee. Not even sure why I'm talking about all this, because guess what? If you don't like it, if it's not for you, you get your money back. How cool is that? I mean, how cool is that? So go ahead and get into it, and if you don't like it, you get your money back. All right, let's get some questions here. All right, let me see. Okay, do you or John factor in any large call put option positions for your pick of the day? Apparently someone bought 1 million put options on SPY on Friday, expiring on Monday. Your thoughts, Mark? So very difficult to kind of get into some of these things without actually delving into the individual, charts and whatnot. But I'm not sure what was going on that. They bought a lot of put options on Friday. I'm not aware of it. I think if that was anything to do with the Jamie Dimon speech, that could have been was it J.P. Morgan people? I don't know. Just throwing it out there. But the thing with SPY is that it's the highest traded stock out there, and same with the options. Many options are traded, so you need a massive order to actually move the needle on whether options are going to move or not. So I'm not aware that a whole million contracts or shares, probably shares, were traded. How does that work on the options market? Well, it's going to have an effect on the options market. As it turned out, it was kind of a short-lasting effect because we have many millions of shares being traded on SPY every day. I don't have a record of it now, but I should have probably pulled up the chart on that one to see what the average volume is on SPY every day. I like to say these days, I'm guessing it's probably 50, 60, 70, 80 million shares. I know days when it's over 100 million shares, especially when you have days of triple, quadruple witching days. You get a lot of volume there. So whenever you have that kind of a trade where somebody's putting a million contracts out there or shares, that is going to have an effect. But usually it's kind of short-lived. What happens is, it washes out pretty quick and then the markets return to some normalcy. So if the market went down on Friday because of that, it'll hit a certain level and then the buyers are going to recognize an opportunity and they're going to start coming in and then moving it back up. And that's kind of the way that is. So another question here from Hans. Can you discuss time and positioning and entry, please? Time and positioning entry. I'm not really sure what exactly. Depends on our strategy. And we get into the strategies in the trading room. We have several strategies that we like to use. The thing is, in the trading room, you have to kind of pay attention. And this is one of the criticisms that we get is that, well, it's going too fast. All right, so let me explain that. In the trading room, we are doing it live and we have to move at the speed of the business, right? We have to move at the speed of the market. So we may not have time to actually get in there and analyze and discuss and teach and all that stuff as to what's happening. We have to identify what's going on and then we jump on it, right? We jump on and say, okay, I see the market going up because of A, B, C, D. Sometimes the A, B, C, D pattern, which is a legitimate thing that we have, or we see a Fibonacci bounce, or we see a breakout of resistance, or a certain chart pattern, or something. So we identify that and we get into it right then and there. So things happen fast, but don't worry about it. So what I tell people is when you start getting into the trading room, the initial thing, the more important thing to do is to learn how to trade well and start by just watching, learning, and then paper trade. Paper trade, paper trade, paper trade. Do not get into real money trade. Don't just blindly follow me and John because you may not get it at the same price. Maybe you'll get it for a better price. You may not get it at the same exit. We're human. Sometimes we do make mistakes. Our capitalizations are going to be different than yours, right? We might have more capital available, so we feel more comfortable with getting into a position. Whereas you might have, a good chunk of your capital into that thing, and it'll make you very nervous if you've got a huge, percentage, capitalization in there. You'll also will have different risk tolerances. I'll have a different risk tolerance than John, and he'll have a different risk tolerance than everybody. We all have different risk tolerances. We all have a different understanding of the system. Don't forget, I've been doing this a long time, and so has John. And if you're new to this, you have to have a real understanding as to what we are doing. And also you have to have a good understanding of the market itself. I can show you a chart and say, is it going up or down? But we could have two opposing opinions on whether the market is actually going up or down, and they could be both valid. Depends on at the moment, this very second, I think it's going down. But when I sort of look at it going back, say 5 or 10 candles, I think it's kind of going up. It depends. What indicators are we looking at? What are we looking at? And does it matter what's happening at the moment? We like to look and see where is the market going to go. All right, we're taking a playbook from Wayne Gretzky's play, where he says they asked him once, the famous hockey player, "How are you so good?" He says, "Well, I skate to where the puck is going, not where it is." And I thought that's very good. And we are interested in where is the market going to go more than where did it go? Where is it? Where is it now? Where has it been? Of course, you have to take all that into consideration as to where it's going to go. But we encourage people to learn, right, how to read everything, how to interpret everything, how to interpret the pundits when they take the news and dissect it, unpack it. That's what they say. Anyway, so I'm not really sure, Hans, how to answer that question. Discuss the time and positioning of the entries. We look for the setups, and as soon as we hit that magic point, the trigger, like the trigger line. For example, myself, I might look at a chart pattern and I might say, this is a cup and handle for me. And when it comes to breaks up through that neckline, which I identify, I'm getting into the upside. And as it unfolds, right, then when that actually happens, hits that level, bang, it's going up, I jump in. Now, sometimes I'll jump in a little bit early, and sometimes I to regret that because it bounces off, goes down. Oh, here I did it again, right? So these are the things that we discuss during the trading room. So, all right, okay, great, Phil. Okay, thanks for that information, Phil. There are there are different companies out there. He's telling me about this one. They charge $5,000 to $7,000. I have spent lots of money on programs, um, and my gosh, the price has really fallen in programs. But I found, yeah, you were talking about the programs before. I found that a lot of these people that would the seminars. I would always ask the presenter, so Mr. Presenter, you trade this to yourself, right? And do you know that all the time they always said, oh no, I don't trade it. I'm just the presenter. It's too risky for me. Well, thank you for your honesty. I close up my books. I'm out of there. It's unbelievable. All right. AI is dynamic, work in progress, long term, in my opinion. Absolutely. I don't know. I've been reading too a lot of the stuff. Some people say AI hasn't even scratched the surface yet. Guys like Elon Musk are saying, we gotta control this. This is gonna get way out of hand, real fast, real deep, real hard. Nobody knows what's gonna happen. Like this is just way beyond anything. So I was talking to a lawyer friend of mine actually earlier today about AI, and he's saying that he subscribes to this one AI that's very good. He said you have to be very careful with AI because a lot of and he knows of a couple lawyers that were fired because they relied on AI and to come up with cases to whatever they're looking for in their research. But the problem was they weren't real cases. AI made it up. There were those cases that they're referring to. There was no such thing. So AI made it up. And when they found out that you're using AI and it wasn't, you didn't verify it, it wasn't real, and you're trying to pass off something that wasn't real, these lawyers got fired. I mean, who fires a lawyer, right? Um, so anyway, all right. Any thoughts of the effect of NVIDIA earnings Wednesday after the close? We have an NVIDIA after the close, do we? I believe that is this coming up Wednesday, isn't it? Here. So here's what I think is going to happen. As with AI, Nasdaq earnings. Let me just take a look here and make sure that is going to be Wednesday the 20th. NVIDIA after the close. NVIDIA is huge. And so it's massive. Last year's earning per share at this time was 77 cents. The consensus forecast is $1.70. All I'm going to say is be very, very careful with this. If you are going to trade NVIDIA earnings, they beat the estimates. They beat and the if the forecast comes in better than expected, I suspect it will, because it's not just the earnings, but it's what they talk about that's coming up, right? The the you know FQ2 forecast, different things like that. That's actually more important. It's the expectation. So if they talk about they expect good things, and I suspect they will, the market will probably be pushed up pretty good on Wednesday because of it. But I would be I wouldn't go betting the farm on any of this. Nvidia is 5.7 trillion. It's a $5.7 trillion company. Think about that for a second. 5,731 billion, 344,000,000, $310,289 is the capitalization. I am going to take this and I'm going to uh, Number of estimates. I'm gonna put this into the PowerPoint so you can see what I'm talking about here. Okay, let me see if I can just there it is. You can see that right there. Take a look at NVIDIA here, folks. Can you imagine a company that has that much market cap? So they're expecting a forecast of 1.7. Now, if this company disappoints, you can see NVIDIA dropping a fair bit, and you could be losing a lot of money if you go really, really heavy in NVIDIA contracts. But if you don't mind the risk, you can also make a lot of money. One way or another, NVIDIA is going to be a market moving uh, what is it? What happened over here? And a market moving news on on Wednesday. Wednesday actually it'll be Wednesday afternoon into Thursday. Watch for some real market making move on Thursday. All right, what else do we have? Da, 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 da. Yeah, so uh, I'm thinking here Wednesday if I'm going to get an Nvidia at all or SPY, um, I might just put in an order for a few calls on Wednesday night before the market closes and see what happens Thursday morning. Not going to bet the farm. You understand the risks. You may want to consider something like that. Okay. Another question here. Do you ever put an order in before the market opens? Roger, with options, the options market opens at 9:30. So the answer is no. I cannot put a market order in before the market opens with options. The market for options opens at 9:30, so you're pretty well stuck with that. But that's a good thing. But I find that most often you'll see a surge in the options pricing, so you'll see the market push up right at market open, and we tend to make a lot of money right at that market open as well. So and that's a good thing. So the options market for SPY goes from 9:30 Eastern time till 4:15. 4:15. So the market actually closes at 4 Eastern time, but the options market stays open till 4:15. Now, bear in mind that when you have an option that expires the same day, right, or if it expires that day, your broker has the right to execute orders on your behalf. I'm not sure what time, but in the afternoons, and I've seen around 3 o'clock, I'd be in an option trade. All of a sudden, there's an order executed on my behalf. So, what are you doing? But they'll send out an email saying, "Hey, are you watching this? You've got an order in there, and it's going to execute, or you're going to lose it, or whatever. Let us know if you are watching it, so we don't have to. But if you don't, they will actually execute the order on your behalf." Okay. All right. So another question here. All right. If I get email alerts, when do I enter that trade time? Why is in the morning, or am I waiting for a certain signal? Okay. So I didn't talk about the signal or the pick of the day here today. I just talked about the trading room. So we have two alert systems. One is called the DayTradeSPY Signal. Now this is an alert that goes to your cell phone as a text message and also to your email. And by the way, both are really good if you're not able to watch the markets all day. But the signal will be in the mornings, 3 to 5 times a week. So when you get this, flip over right away immediately to your platform and make the purchase. It's a very specific option that we tell you this is what we are looking at buying, and because we're not licensed to tell you what to trade, but we tell you what we're looking at buying. And so just get in and buy it and immediately put it for sale for a 5% profit target and walk away and come back. And if it hasn't sold by the end of the day, sell it then for the market price. These options have plenty of time, so you should never go to zero. In the rare time, it does go down. But that's kind of an easy trade to make a 5% gain. Then there's, of course, the pick of the day. Now, the pick of the day, oh, by the way, the DayTradeSPY Signal is algorithm-based, okay? It's an algorithm-based system. Now, the DayTradeSPY pick of the day is a little bit different. This is when John and I get together every morning and we discuss the market, looking at all the inputs that we look at, and we determine whether the market has a propensity to go up or down, and then we will determine which option is the right one to buy. These two generally have plenty of time in them, And then these are designed to be bought at market open. So in other words, the pick is designed to be anchored in time, right at market open. So what we're saying is that the markets go up and they go down. And if you buy it right at 9:30, strong likelihood it's going to go up or down. If you buy now, put it for sale for 6% profit target and come back later and collect your money. Now, in all frankness, if the pick is, say, a call option and the market opens, but at that opening price it's going down, well, just wait until you see the pressure going back to the upside, then get in. All right, you'll get it for a better price. They are both very, very good programs. I don't know what the current success rate is. I thought it was around 90% or something. They're very successful programs and they do very well. So that's kind of the alert system that we have. All right, folks, I think I kept a lot of what I'm going to do now. I want you to put in the questions box, a number between 1 and 100. All right, and I am going to pull up a number generator, and I'm going to give you, say, half a minute to do this, starting now. Put it in the questions box, a number between 1 and 100, and I'm going to run the DayTradeSPY random number generator, and the person closest to the number that we pick is going to get the free ebook, Triumphs and Tragedies. All right. So 5, 4, 3, 2, 1. Okay, now we are cutting it off. Okay, the last one is Arnold. Okay, now where is my random number generator? Okay, so here's the random number generator. Now this is not the number, folks. This here is not the number. I'm only telling you what I'm doing here is this is last week's or some other numbers. So, all right, so this is the random. So now I'm going to hit the button. Where did I go? Right here. So, okay, 5, 4, 3, 2, 1. The number is 52. 52, the person closest to 52 is going to get it. And let me see, who do we have here is close to 52? Okay. Let's see. We have Bill F. He's got 55. He's the closest so far. By the way, if two people have similar, results, then you both get it. And nobody else came close. So Bill F is the winner. Bill, I will send you the ebook. Congratulations on that. And that's pretty cool. Very good. Okay, we got a winner, Bill F. All right, folks, what I'm going to do there is going to wrap it up. Thank you all for joining us here. And this is the QR codes for the various programs that we have. If you put your camera on these, all right, get these QR codes in there. You'll get more information and how to subscribe to our Inner Circle, our DayTradeSPY Signal, Pick of the Day, and the Trading Room. Folks, it's been a pleasure. We'll see you the next time. Have a good night.
the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you